Hey, test. Just doing a test here. Hey, thanks, Andrew. Can you hear me all right? Awesome. Thank you. Man, I'm glad you caught that trade, Andrew. Awesome, man. Hey, Seba. I am live. We will get going here in just a few minutes. Awesome. Glad you can hear me clicking. Okay, folks, let's kick off this party. We only got about 100 viewers. I don't know where everybody's at, but hopefully they're making money wherever they are, huh? A couple things. Trying to come up with, I always get, you guys like to hear my stories. I'm working on an old floor story. I'll probably tell you a little bit later from the old days when we used to stand up in trading pits and yell and scream at each other. Anyway, really appreciate everybody coming to the show, and hopefully have all your questions. There's a lot going on for sure. You know, that I mentioned in Tuesday's video that, you know, this is going to be a trader's market. And sure enough, man, I'll go through the details here, but we traded down to the extreme on a weekly overnight last night in this thing. Here we are, 100% reversal of yesterday's decline. And it's almost like yesterday's decline wasn't supposed to happen, right? And we'll go through all the details here in a minute. Yeah, that's awesome. Yeah, so if you guys, I'm going to reach out to you because there's a lot going on out there in the world. And I would, you know, if you have some topics, I know Jay's on here, he can back me up a little bit here. And, you know, if you have some topics you want to talk about, let me know that stuff. But we'll kick in and I'll do my typical thing where I actually just come up and go through some market scenarios and those type of things. And we'll go on with the all the, you know, the markets as far as everything goes. Let me get my microphone out of the way there. There you go. That's much better, right? And we'll just start kicking through this stuff. You know, we're up 2.43%, up 2 points, down 2.6, I think, yesterday. So just about a complete reversal. We did trade 21 on the futures, so this is going to be very interesting. Yeah, gold's kind of come alive a little bit. It's just hanging around. Anyway, we'll get through everything here. Yeah, I don't know. Floyd's Garage. Have I heard of Zero Marginal Cost Society? I have not. Are you on our Facebook group? If you are, post something in there. Glad to look at it. That's going to be the best place to get to me. And real quick, if you folks don't know about it, we started a Facebook group, and it's really, we're trying to keep the dialogue around the work that I'm doing, what's going on in the channel, software, wave tech process. It's going to be an opportunity for me. I didn't get it. Markets were pretty busy. I was pretty busy yesterday. Actually, the next couple of days, I'm pretty busy. I'm going to spend a couple hours with you folks today. But, this Facebook, it's at Facebook/groups/the Kendall Report. So look that up and join us. I think we just started on Saturday. We've got about 1,000 members already. And I really, just for those that you are on it or thinking about joining, it's going to be about this community and about the stuff that we're trying to do. And I actually am going to do some live only Facebook stuff separate from the YouTube channel, just for people, because there are people that are actually working with us on software and other things out there that I want to really build that community up. So join us on that thing. It's going to be, I think I'm having fun. We've been looking at some other venues to communicate, but Facebook's really good because I can actually go up and do a quick video. Somebody had a question last night about a stock. I just went up, mocked them. I'm setting myself up for disaster here. I'm not going to be able to do a lot of this. Just happened to see a question on Intel. I put some arrows and drew some things in, posted a video with a sentence on it. So it was really nice to be able to communicate with graphics. That's the problem I have with the YouTube channel. There's no way to respond with graphics, and in the last couple of days, the trolls have been out in force, going back and watching videos from 5-6 days ago, telling me how wrong I am. It's pretty funny, actually. I actually enjoy it. Most of these people don't know my background. I'm a warrior. I've been through the wars and the pits, and been through a lot of stuff. And trolls don't bother me. I actually like them. I have fun with them sometimes. Okay. Let's see here. Yeah. So. Yeah, just for the other thing on just one more comment on the YouTube or on the Facebook. Just make sure you stick it. We don't want it just to be like, we've got some community rules you'll see when they come in, and we've been kind of hardcore, and people have don't like it. It's one of those things where it's no shoes, no shirt, no service. Otherwise, there's rules. You come in, and I don't mind. Listen, I never mind if someone disagrees with me. I just hate when people call me names. So I'm pretty straight up. When I get called frauds and all kinds of stuff like I see in the channel, it really bothers me. But let's go ahead and kick off the market stuff. There's a lot to go into. I see some questions that are coming up, and let's see what's going on here. It's quite a bit, actually. So let's go on full screen. I'm going to go over to I've got gold up here, but let's go over to the S&P. We're really seeing some crazy stuff here. Yes, it's interesting because the cash markets, I mentioned this in the video last night, that there's a good chance that we're never going to print down to the extreme on a weekly. I'll go through that in a minute, but we actually traded down yesterday. I've got it on the grid here. The low was 33.29, and we had a 33.20 was STX. We fell just short of that, but on the weekly, it was almost exact hit on S3, and some things happened overnight that switched. I had somebody commenting, I did a little impromptu session at the close yesterday, and markets were looking pretty weak, and they followed through overnight. Matter of fact, we gapped lower We were doing the WaveTech training yesterday, and markets gapped lower, and they printed down to the extreme. I'll go through, unpack this here in a minute. But all you have to do is take a look at what's happened today. Now we go here, and markets gapped higher, not a physical gap on the chart, but we opened above the 40-day moving average. And for me, this was very significant in that this was the key support level. I actually didn't think it would get below this number. We spiked under it for a minute yesterday, and I'm telling you, the machines drove this thing down so hard, and they pushed them into the close. It looked like we were gonna get a bounce. There was actually a pretty good trade I put out yesterday on Twitter, and I knew if we got over a certain level, we would trade up to at least 50, 56 to 62. It was a 43 trigger, and we did. There was about a 13, 14 handle trade there, and it was set up pretty good. But this move that we've seen overnight is significant from that standpoint. And as we look at the grid today, we've got a high 34.22. I mentioned this in the commentary last night. I thought, well, we could probably print 33.84. I didn't think we'd get to 34.12, but we've taken that out, and we're now at 18, trading 18 last with a high of 22 on the cash. So we've almost printed RXT on the upside. As far as the downside goes, the low was 33.66. We never came anywhere close to S1. And I also mentioned that the way that the futures were trading, I got the commentary done a little late last night, and so I only covered the S&P and the NASDAQ. So I'll go through gold, I'll go through silver, all those things here as I usually go on my what I call my first hour rant on this when we do these live streams, just to kind of catch everybody up. So let's go to the weekly, because I think that's where there's some interesting things that we can talk about. Here's the weekly cash. Here it is on a screen here. Let me draw some things in just so I make sure everybody's eyeballs are in the right spot here. So right here is S1. That was a couple things happened. S1 was 33.30. The low yesterday, 33.29.27. Perfect hit on S3 and reversal. Now I set this up on Tuesday. On Tuesday's morning's video, or however you want to look at it, I usually do them Monday night for the next day. I talked about, trading off these extremes. I thought we would hold the 63 number. We blew through it, machines drove it down, but it was a perfect bounce off of 33.30. Here we are 100 handles higher 24 hours later. So kind of a crazy situation. But this is significant, and you see R1, I was saying that I don't even think we can get to R1 the way this thing's trading this week. This may not be the case at all. We may be able to easily get to R1 34.56. And there's sometimes you see things happen in markets. I'll do my best to try to bring this out as far as that goes. But sometimes things happen in the markets that I talk a lot about this. Those that know me and around me, is sometimes it's just an aberration. Like yesterday was exaggerated. It went beyond a lot of the metrics. The trolls will say, "Oh, you were wrong. It took all your support numbers out." These numbers that are on here are probabilities of what is likely to happen, and they're pretty good. And that's why I put the matrix on the S&P. And I can tell you, for 2 months, I've been working on a project trying to get the grid out. We've got some amazing ideas working with the grid, even with the potential of having real-time meters on the grid as it trades on multiple markets is the plan. But we'll go to that. I'll tell you about that as that project gets closer. It's just taking longer to get done, but when it's done, it's going to be ultra cool. And but these grid numbers are, that's why I put out so we have the daily grid, which is the projections for the high lows, and then we have the matrix for the week. And the matrix for the week encompasses daily, weekly, and monthly numbers, and you have to connect the dots as they go through the month. And what I ultimately want is almost like a heat map for the grid, and we're working on some concepts and things like that. This is you folks, this channel, the things that we're doing here has really got me motivated to build some new, very robust tools that encompass a lot of things that I talk about on the channel. So bear with me, and we'll see what happens here from that standpoint. But yeah, but what happens in these markets is you'll get this spike down like we had yesterday where it went below the 40, and like that shouldn't have happened. Then you see it gap back above. That tells you about the values in the markets. That tells you about a lot of things that are going on from the standpoint of the underlying trend. And those of you who watched last night's video, it's important to understand what happened in last night's video. I talked about the short-term database. Now we go backwards 3 weeks ago. I've been telling you my expectation was for a mass liquidation of all the short-term trades. Well, this little blowout that we've had just blew out a lot of trades. We actually had I don't have my worksheet. I usually have it in front of me from last night, but we had about 4,500 sells. It just dumped out. We're at 17% bullish on a short-term database, which I've advertised for weeks that this is going to be a very positive event, and that's exactly what's happened. So we've got a recycling of the short-term trades, and on the intermediate term basis, 70% of the symbols in our database are signaling intermediate trends. And what that means is that they're looking forward. There's a minimum of 160 and 180 days out that these intermediate trends are going to unfold. And, people are, all over the internet, the biggest crash is coming. There's a guy named Gunlack. I think he's always on CNBC. He's a bond manager. He claims to be the new bond king. And this guy has been so wrong. He's missed, I hate to be a troll, but he's been so wrong. He's been telling you how the market's not going to go up, it's not going to go up. And now he's once again, now he's back on, it's going to collapse. Pretty much that is mainstream stuff that you see out there. And I think probably the funniest thing I saw on Twitter this morning was Dave Portnoy dropped $4 million on having fun on Twitter and trading the markets. And it reminds me, so I'll go through a quick story here, and it will all come together on this. But, we used to have on the trading, and back in the trading floor, John Najarian tweeted out something about this. That's where I saw the tweet from. And John's an ex-floor trader. We know a lot of the same people. We have mutual friends. I haven't met John. I'm going to make an effort to do that. But what used to happen is these smart guys would come down to the trading floor, and they're big boisterous guys. They'd have some backer or some money behind them, and we would just take their money. They were easy. These guys thought they were smart. Dave Portnoy is actually a very smart, witty guy, but he's not a trader. He's an amateur. And, and he can laugh at $4 million because he sold his company for $100 million. So, I always laugh when I see rich guys that think they're smart that lose money, and they go, so what, Well, it's $4 million, so it's all been revealed. And that's a lot of what we've seen around the internet, around markets, and people that are, amateurs and all that stuff. A buddy of mine used to say way back in the 90s, goes, everybody's a technician. I remember I started as being a technician in 1980. I know I'm old, right? In 1980, and it was like we had voodoo dolls on our desk because we had charts. And now everybody lives by this stuff. And so this is where we are today. But all of this stuff, and the reason why these markets are volatile, the reason why you're seeing all this stuff is the level of emotion. And I mentioned this in last night's video, is the level of emotion in the markets right now is the highest I think I've ever seen it, because there's just people just stampede in, stampede out. You got the machines and the algos trading, and so you just get this exaggerated volatility. You know, we traded up to 22. We're trading 12 now on on the S&P, but all of these gyrations that are happening are going to continue. I told you on Tuesday, watch for monster volatility, a trader's market. This is absolutely trader market. So if I make sure every night when I do the video that I get the grid up there. I usually have the daily and weekly grid. You can go to the channel. I actually said on there, I'm not going to post the grid on the channel anymore. I'm going to continue to do that. I saw a couple comments at people that aren't on Facebook. So that's fine. I'll put that up. It's just kind of one of those things that's another thing I have to remember to do every night. And ultimately, we'll have this all automated, so it won't be what we call the man in quotes, man in the middle. And so that, but all of these gyrations that we're seeing and this emotion, it's just a stampede in and out. You know, it's crazy. So this volatility will continue. The grid that you see here on a weekly basis right now is exactly what we're going to trade within. So this is going to be your broad trading range. Is it probably as high as R1, R2. This is a weekly grid. That would be 3456, 3490. Don't know if we'll get above 3500 here for a little bit, but on the downside, you're going to look at, I think now 3363 is possible. Don't think that we can't print 3363 again. There's plenty of motion here. The fact that we're up 2.51% today means absolutely nothing. This thing is going to gyrate. As I mentioned before, the 3-day volatility indicator was kicked up to 120 the other day. It's even higher right now, but the volatility will continue to stay really high. So if you're a trader, you're doing options, you're trading this stuff, there's some great trades out there. There's this, and off of this grid, so watch the channel. I put this grid up every night so you can see this stuff. This stuff's very powerful, and there's a video on how to use the grid, and I need to watch that myself again just to see if I need to make an update to that video, since we've got a lot of people. I think we're almost 22,000 subscribers now. So that is, I need to make sure I'm getting that best information. Sometimes I was really slamming it to get information out to everybody. So I'll go back and watch those and see if we need to redo that stuff. So anyway, yeah, so let's go. Yeah, I like that, Max. Yeah, some old pictures. That's actually funny thing about old pictures. If we had iPhones right now, man, I could rip it out. I could really scare you guys and show you stuff of my old rock and roll days, and with long hair and my bass guitar. That would be interesting. But anyway, all of this is a trader's market. We went from a trending market to a trader's market literally last Thursday. We got the RXT sell for Thursday morning. We got exits on all of our short-term stuff between Tuesday, Wednesday, and Thursday. We're major sellers in the market from that standpoint. The database literally puked out 10,000 symbols in those 3 days. That's how many stocks rolled over during that period of time. So we just blew this thing out. And so now what's going to happen, even with this volatility, those stocks are going to be spiking around. Some of them are going to come back in. And I'm still kind of on the database, because the database is what drives me. A lot of people try to figure out what sentiment is. Well, sentiment to me is what our database goes, and not a lot of people have a proprietary database like I do, where I'm monitoring literally 17,000 symbols nearly. And so I'm able to see in depth in markets that you're not normally able to see. And from my viewpoint, I know it's a black box to you guys. From my viewpoint, I have the perspective of knowing that these models and these signals are doing everything I told it to do. So I can now read the things on a group. And I've talked about this a lot before. Just drawing trend lines on an index is a joke, right? Oh, we got a wedge formation. That stuff, that's amateur stuff. Whenever I see guys doing wedges and talking about trend lines and, you know, RSI, you know, I was told on the channel, if I would have known RSI, I would have known the market was overbought last week. Well, I did know it was overbought because 2 weeks before that, I was telling you our database is going to roll over. We're at 90% long. I knew we were coming in to a rotation, and I've been talking about that for a while. So what we'll be looking at now that we're down, so if it were RSI would be, you know, down into the 20s right now, and now we're going to watch for a turnaround in the database, and that's exactly what's going to happen. Hey, Wacky Warrior, thanks a lot for the super chat, man. Appreciate it. You know, yeah, so all of this stuff is important here from that standpoint. So let's take a real quick look at the NASDAQ, and then what I'm going to do is I'm just going to go ahead. I want to talk about the Dow. I want to talk about gold and silver, and maybe we'll hit. We can talk about Bitcoin. I looked at it. There's not a lot going on. There is a lot going on there, but we exited that trade for a while ago. But a couple things here that I mentioned, and this was just what I was talking about a minute ago on this chart here, is we spiked under the 10-week moving average. Now, I discussed the PPMs. Those of you that are just watching channel for the first time, the PPMs, this first derivative, PPM number 1, 2, and 3, they actually look at the moving averages. A lot of people use exponential moving averages. I'm old school. I've got bar charts up here, no candles, don't care about engulfing, you know, patterns, don't care about dojis, don't care about that stuff. Just pure old school bar charts, okay? Somebody made a comment that, you know, this is, they can't understand the charts because they're old school. And this is good. This is just pure open, high, low, close, and that's all you really need to know about the markets. And the PPMs are actually price pressure momentum, and they tell me about what I call the angle of attack. So if a market's going up, if the PPM's over a 0.25, which represents 0.25% per day or per period, it could be a 5-minute, 1-minute, hourly, weekly, monthly chart, doesn't matter what it is. As long as that slope is telling it, what it tells me is what the probability for the market to go below that. Now, I mentioned this the other night that especially on the NASDAQ, it was around 0.76. It's actually improved a little bit with the rebound in prices. The PPMs that you see on the screen here are calculating in real time. Even though it's a weekly graph, it's still looking at the last trade, calculating what the value is. And we spiked under that 10. And what I said is that the probabilities at a 0.75 of the market closing below that 10-week value, and that, we'll put it up here, is 11,158 right now. The probability of closing below that was only about 10%. And so what that meant, if it traded below that, it was a buy. And we saw the low at 10,935. It's rebounded back to 11,410. And if we look at the grid itself, we're now looking at the potential of going back to 11,727. I talked about this in last night's video. So we're looking at maybe an R1. But we literally had a S3 also on the weekly. This is the NASDAQ futures. You see you see over here on the pop-up window, S3 10,970, the low 10,935. We spiked just a touch under that, and then we got the reversal. And last night the Nasdaq led the way off the lows, and I was commenting with somebody on Twitter a little bit ago, and these are 24-hour markets. You're no longer trading. If you're looking at the S&P and you're doing end of day, if you're not watching the overnight markets, it was obvious within 2 hours of yesterday's open or on the overnight session that a low had been printed and there was a reversal happening. And that was a key event that happened last night. So we have basically 24-hour markets now, and it's almost like trading Bitcoin, especially when the volatility kicks up at the levels it's at right now. And so this is exactly what I was talking about. You trade the extremes of the grid, and you're gonna be able to take the other side of these, and somewhere between R1, maybe R2, you're going to be able to flip this trade, and this market's going to come back in. So like I said, don't think this thing is just going to go straight up, even though Nasdaq's up 3% and so forth. I'm going to flip over to a chart here that I want everyone to look at. And one of the things that, thanks a lot, Samuel, I appreciate it, man. So I'm not even going to go through what all these are. Although I can tell you this, it starts off with the Dow Jones, S&P, and it goes across with everything. These are spreads, and what you guys don't know is I'm a really good spread trader, and I've been telling you these spreads are going to turn, and they're going to turn big. So this is every indice versus here we go. Here's the ESU versus the NQU, and so this is going to be, I still think it's going to be a major trade, even no matter what happens here. And I've been talking about this rotation for a while. You're going to have to see these markets. You're going to see the mid cap, the small cap, and even primarily the S&P is more of a mid cap index than people would like to admit. There's a top end of the S&P as large cap, but as you go down the spectrum, if you get past the first 50 stocks in the index, they start to look more like mid caps than they do. So it's kind of the S&P is more of a blended index with a heavy weighting, and all these indexes are weighted, and so this always skews how they act. But my expectation, been talking about it, I'm going to say a month now, is while this spread is starting to consolidate, it's moved a bit lower, but this is going to be a big trade. I suspect it will come back up substantially, maybe up into the midpoint up here at least. And I think ultimately, if the markets are going to rotate, going back to what I said a few minutes ago on the market from the database and the intermediate database, we're going to see a continuation of a longer trend, 160, 180 days. By the way, those are trading days. That is the better part of 6 months, 8 months down the road. So we're looking at end of first quarter next year is what I'm talking about here. And so if we're going to have that happen, we're going to have to see these secondary indexes or the different asset classes start to kick in. So we're going to see that. And I started building something yesterday. I worked on it a little bit more. And as I get it out there, especially on the Facebook channel, Jay and I were talking about this yesterday. We're going to put together what I call the capacity trade. So as the market comes back on, and a day like today, I mean, like we talked about the hotels and the Norwegian cruise lines, all that stuff that's not working, the airline trade. Everybody would give me a hard time on my airline trade when Buffett sold, and I showed this yesterday in the Wave Tech. And what happened was, it actually, that that trade, 9 stocks, trading 9 stocks, and our portfolio manager is up 100% this year. So, you know, everybody made fun, and this started right after Warren Buffett sold all the airline charts. All I did was put everything on a short-term basis, put these symbols into our database, into our models, and let it run and let it do the allocation magic that it does. And that's 100% trade, and it's not done. These things have another level. It's going to be interesting to see how this portfolio ends up, because the beauty about that is it's got a sell discipline. It's karaoke. I just watch it. Now I've got the symbols in. I'm going to let it just rotate here. We actually had a couple sell signals, and we went from 9 of the symbols long to 7, but I'm getting too far down this rabbit hole. The point is that these trades take a while to unfold. The capacity trade is going to come on. You know, listen, in the end, it doesn't matter who wins presidential election. We will all be trying to get back to normal. You know, they've done a pretty good job, you know, scaring everybody in the world. But, you know, people want to be people, and ultimately we will be. And whether, you know, vaccines and all that stuff is we'll see what comes out of that. But we're humans. We want to be out with other humans. That's what we do. Anyway, so let's go dig into some of the other stuff that we're going to look at here, and let's start with the Dower. Now, on the I'm going to show you the futures to start with, but the futures are all the way back to their 200-day moving average. Now, this is the nearest future, so this has discounts and backwardation and all kinds of stuff over time. So this has a little bit different look, but I want you to notice that PPM1 is crossed to its first derivative over here. PPM2 is about to do it. All of these PPMs are turning up, and this is the beginnings of a bigger trend. Let's go to the cash. So cash is a ways away from its 200-day, but we're also coming right into a resistance point. And I talked about this last week and on the daily videos, is that the resistance is going to be somewhere around 90, 93, 80, something between 9,400. I'll bring in this table so you can see it. Right now, the 10-week moving average, and I'll help you folks understand, is the PPM1 is a negative 41. And what that tells us, there's only about a 40% probability, or otherwise 6 times out of 10, it will not be able to get over the 93.87 with this level. And what we're seeing here is the high 93.66. We basically have hit the 10-period moving average. So the Dow is likely to stall in here, but we do see PPM1 crossing over its first derivative, and PPM3 down at the bottom here is close to doing that. And this is what a bottom looks like. And, you know, I love it when everybody's telling me that the Dow is going to 88, and that's probably the most common number out there of where the Dow is going. So it has to go somewhere different first. It may end up there, but it has to go somewhere else first. So what will likely to happen here on the Dow is we're going to stall here. We're going to see some resistance between this 93.80, 94 and a quarter. Sometimes we'll trade just above this. And the other thing that will happen when this week ends, because of this higher price, we're going to see that 0.41 drop. And once it gets under about 0.15, then it's free and cleared to run well above that 10-period moving average. Now, I've been talking about this for the last 3 weeks, maybe 4, that this pattern that I'm seeing here is a bottoming pattern in the Dow. It's going to continue to do better. And that's part of the reason, which I'll cover next, is why gold can't get out of its own way right now, is because of that relative strength in the Dow. So if we start to see the Dow flatten out here, that will lead us to the potential for gold to start to move higher, just because we won't have that pressure on there. Okay, so this is weekly. If we go to the daily, you'll see something interesting in that we also went to just above that 40-day moving average. Just above that 40-day moving average, and now it's reversed back down. And we also, if we look at the grid on this thing, 93.66, R2 for today was 93.69. So we basically had an R2 hit. The low has been 93.14, and you'll see S3 was 93.11. So we're working toward the bottom end of the range because we reversed off of that high. And what we've seen over the last several days as the market was declining, we're actually seeing that the Dow was strengthening during that time. So if I'm right about the Dow, there's a couple interrelationships that you need to pay attention to. Is that if the Dow is going to fall back a little bit, back toward this most likely maybe 92.90, 92.80 level, we fall back into that level, that's going to be enough to let the market, the stock markets consolidate, maybe trade a little higher to the numbers I mentioned a few minutes ago, and then ultimately also allow the gold to actually move higher in its pattern. So let's go ahead and talk about gold next. So a number that I've been talking a lot about is 1960, but if you look here, the 10-day moving average is 1951. We're trading 54 right now, and a close right where we are right now will be enough to start to signal a bit higher move and start to trade up towards some of these levels at potentially between, now we'll go to the weekly grid because that's where you're going to find these numbers, but somewhere between the 1990, maybe 2015, which is the big pivot number in gold right now. So gold has finally been consolidating for multiple weeks. PPMs, you notice PPM 2 down here in the middle has actually flipped. It's about to cross its first and second derivative, which is also another sign that we're about to do a trend reversal. And actually and I've talked about this over the last couple of weeks, is that gold is trendless. It's been a trader's market as well. We printed 1908 last week. We printed 1911 this week. And now we're trading at 53, 54. And that's going to be the support line. Let's go to the weekly so I can show you the grid. So you'll see that the 10-week moving average, 1936.40, we were able to go through that, but this is another one of those PPM rules that I talk to you about all the time on this channel, is that we have PPM at a 0.75. It's actually ticked up a little bit. It was 0.68, I believe was the number, and now we've rebounded back above that 10-period moving average, 1936 weekly, this weekly chart. But we look at the grid, look at R1, 1955. So we're trading right at R1 on a weekly basis. On S1 on the weekly chart was 1913. The low this week, 1911. So we've done an S1, R1 range so far this week. If we can get above 55, then look for 78. And here's the numbers to watch. 1978 would be your next target if we can close above 54 today. And then we're ultimately looking at 2005, 2002, 2023 on the grid. But there's a pivot number at 2015 that is significant. And we do have also on a weekly high, we had a high last week at 2001. And so we've been in, I still don't think we're ready to break out and go to new highs, but I do believe we can trade up to this 2000, we'll call it 2000 to 2020 level is highly likely, just as far as the grid goes on this chart for this week. I don't expect to see any expansion in the grid right now, maybe a slight movement up. We'll see when this particular chart recalculates, the grid recalculates on Friday night after the close. So we'll have new numbers for Sunday night's video. And so, but you see, PPMs are all maintaining trend levels. So trend levels 0.25 or greater positive. So you can see 0.76 on PPM1 over on the left here, 0.57 on PPM2, and 0.64 on PPM3. So we have all three levels of trend are locked down. We have a very robust trend here on a weekly basis. And this is what I've been talking about for literally the last multiple weeks, is that this 10-period moving average is going to be the absolute place to buy. If you recall, 2 weeks ago, I said if you could buy gold between 1920 and 1900, it would be a screaming buy, or be a bargain. We traded up to 2000, and the suggestion was that we would actually get a move up to around 2000. So it was a great trade. I think a lot of folks were buying below 20, and you wanted to sell that and sell that rally, and we're still in that sell that rally mode, but it's probably going to be at least 1979. Here's R2 that I was talking about, that 2015 on a weekly basis. So there's a number on a weekly that I've been watching. That's a key pivot. Above that, on a weekly basis on gold, you're looking at 2051, 2083. I don't believe we'll trade that high. The high was, all-time high so far was 2089. So I just don't see us printing up to those levels. That would be a retest of the high. Certainly possible, but I don't think so. Dustin, thanks a lot. I really appreciate the super chat. Really do. Thank you. But the whole pattern is setting here is still upslope positive, still trending, but it's consolidating as well. And we've had 6 weeks of consolidation. There's probably a couple more weeks before we're going to be ready. Before we're going to be, ready to actually move to the next level. Let's just look at the monthly, just dig deep on this thing a little bit here. So monthly also has set up, this is for the month of September, R1 2023, which maps out to what I just was talking about. S1 1934, we printed just below that with 11. And I also mentioned a couple of days ago, and I think on Tuesday's video, that 1908, last week's low, is going to be critical. We printed 11, now here we are at 50, 53, 54. So that was a pretty good test of that support range. So more work to be done before we see anything really positive. Okay. Let's go to silver. This is monthly. Let me back up. Let's get to daily silver. There we go. Similar situations, just like with gold. Silver is locked down, and a lot of folks think, well, if gold's going up, silver's going to go up. They're connected to a point, but the correlations are very sketchy from week to week, day to day. So they're not actually locked down from that standpoint. But we're seeing PPM1 at a negative 0.18. We're seeing positive underlying trend. So the 40 or otherwise ppm 3 down at the bottom is a plus 0.70, but it's in what I call the trend maintenance mode. So the 40 period moving average is going to be the key level to watch, and this is a simple average. 25.89 is your support number. We spiked, let me get to the right number here. The low has been 26.56. S2, by the way, on the grid, 26.53. We're trading 27.10. The high's been 27.18. R1 27.21. So S basically an S2 R1 range on a daily basis, but we're seeing kind of a mixed picture on the ppms. Yeah, just looking at the chat line here. Tobias says with the database rolling over. Yeah, I would wait. This is a trader's market. So if you didn't buy, 33.30 on the S&P last night and looking to trade out of it here, then I would be just waiting for this thing to grind out. There's going to be enough. Watch the daily videos, because I'll be covering what we're likely to see from the S&P standpoint. And the same thing even here. I would not be looking to actually do much with silver. I think gold's still a better play if we can get a close over the numbers I just discussed. We go to weekly. Now you see the weekly grid, and now low 25.98. We didn't quite make an S2. We printed just below S1. On the upside, 27.30, basically 27.29, high 38, and we're trading at 27.09. So we might be able to move up towards maybe 27.90s in this range. We do have positive ppms across the board. They're really strong markets. If you get a chance, if you see anything close, we traded down. We made a lower low than last week after a reversal pattern. So let's just cover this and say exactly what needs to be said here. If we close below last week's low, last week's close, 26.71. If we close below that, we're above it right now. But if we close lower on the week, we're probably going to print down toward that 10-week moving average, and that average is moving at 3.58% per week. So roughly it's going from 20, let me just get a calc on here, about 90 cents per week. So 20, we'll call it 25.80. But if you bring up a simple 10-week moving average on a chart, you want to buy anywhere you can close to that number. This ppm is just off the map. There's almost, we'll give it a 10% probability that it could trade under it, and a 0 possibility that it will remain under that on a closing basis on a weekly. So anything below that, the daily grid, I know I don't cover this every day on the channel, but when I do, I always make sure I get those numbers out. One second. Yeah, somebody's asking if this is a dead cat bounce. Now I think that the cat's scratching a little bit. It's alive. This, when you get maybe a 1% bounce would have been a dead cat. It would have been very muted. But when you get a reverse of the reverse, that tells you something. There's a lot of value in this market down relative to the indexes at that 33.30. 33.60 now. I talked about this in the beginning of the show, and I know we have people watching the timeline, And once this repost comes from on YouTube, we'll mark the timeline where I talked about different things. I know everybody's keeping track. There's several people keeping track of that. So, but yeah, so as far as we're kind of flopping back a little bit here, but as far as the market's going, this is a pretty significant reversal on a weekly basis off a key number, which was the S3 number. So we're looking at the potential for a trading range at best. And I mentioned also we've got a lot of resistance up at 3480 level. So let's see. I just want to make sure I cover two more things, and then don't give them to me yet. Don't give them to me yet, but I'll ask you for some stocks. I wrote down a few that some of you put out already, so I have them ready to go. But and we'll kick off with the Apple and Tesla when I go into stocks, and then we'll everything else on that as far as that goes. Yeah, so Admir, exactly. Somewhere around that 25 number that I mentioned on the silver is definitely, if you can see that number, you definitely want to play that, and there'll be a nice couple dollar bounce. But all of these markets, and it's funny, you know, I've talked about this a lot. I talked a lot about this over the last several weeks, is that, you know, these markets tend to be all configured the same. If you folks remember going back many weeks ago, markets are all going up, everything in the same structure. And the same thing is happening again. And so the market's it's always like that, but it seems like since the crisis, since this V bottom came in, things are very, very, I guess, correlated at a higher level as far as the patterns go. And there's something else I haven't talked about, and I'll see if when I'm going through stocks today, I'll take a look at it. But I mentioned this at some point in time. You know, it's amazing that my voice works, because I can talk for hours. Okay, so it's good for you guys, I think. But one of the things that we're going to flash back to 1987 and in the crash of 87. And when I called it the crash pattern. And these patterns that we all look at every day train us on how to react in different scenario, I guess in similar but different patterns will emerge. So otherwise, what I'm saying here is, in 1987, we had this crash pattern, a little consolidation, and then it went back up. Almost every chart, I don't care if it was a 5-minute graph or a 30-minute or whatever length of chart you were looking at, this pattern reemerged over and over and over. I called it the crash pattern. So you see the market get cratered, you knew to buy that crater, and it would recover. We are seeing another, and I'll look at for this when we go through stocks, and maybe we can find some even on a shorter term basis. I'll poke around when we go through some of these stocks. But we had a V bottom. You look at this pattern you see here. I'm seeing this pattern all over again. So what we're seeing is everything. All of us watched this thing happen. So when a stock craters out, like Apple, we'll look at Apple and Tesla here in a minute. But when these stocks crater out, V bottom, same pattern. Everybody knows how to respond. It's a trained response, and it builds into the trading society, if you will, and the psychology. And it starts replicating itself over and over and over again until there's a new pattern. There's a pattern interrupt, and then there's something new. For right now, that V bottom, I've seen them a lot everywhere. That's going to keep flashing back. So that V recovery, and this is a weekly graph, so it doesn't really reflect the V. But if I crunch the scale down, you'd really see it. Let's do it. Let's have fun. There's your V, right? And that pattern is showing up everywhere. Not only is it a V, but it will go all the way to a new high. Just this is going to be a reoccurring pattern. And so if you look at a stock, and I'll show you some of this stuff, if you look at a stock and it's maybe went up like this and now it's in consolidation, some of these stocks are lagging. This is a weekly intermediate basis. So what will happen is you'll get a consolidation. That's what I've been talking about, going back to our database, looking at all that stuff. In fact, let me see if I can. Let me just see if I can. I'll bring up the database here real quick. So this is a WaveTech tool, and we go to all stats. What I want you to see here, this is what I was talking about. We have right now 17% of the stocks, 13,638 stocks. If you look down here in the last 2 weeks, we've had a rotation of buying and selling. Excuse me. So there's been 18,000 sells and about 3,900, we'll call it 4,000 buys. So there's a rotation going on here, but way more sells than buys. And that's just in the last 2 weeks. And so this data, from a short-term standpoint, this database is very, very active. It gives you some really good leadership on what to expect. We should also see down below here, I mentioned this last night, the only sector that's still long on our, and these are all proprietary sector indicators that we have here. Every one of them except for transportation is out right now. Transportation still has a 12.49. This is on an index level gain. It went long on 724 and it's still long. And something that these models do and what our stats do for on a quant from a quant viewpoint is we actually know what the average holding period for these signals are. So in this case, this one's 31.78 and right now it's 32. So we've met the typical holding period, and I can actually pop this up here and go to what we call the trade profile. And this is on every symbol in our database, okay, on any signal we have. So it shows us the last price, but it also says that the average gain on this index, is only 5.5%. The standard deviation is 10.93, but we've exceeded, you see over here, we've exceeded all of the metrics for the symbol, but our holding period is right. It's as soon as it hits to the 32, it goes to a hold, and the hold means that you're holding it. It's not a sell yet. It will go to a hold, and then ultimately, if it stays for we can go in and dig into this a little bit longer and see the maximum that is held is right here, is 76 days. So this particular transportation index has been on a short-term signal, has stayed long for 76 days. It's right now 45 days under its max. So there could be more of a run on this, and this might be one of the leaderships. And I just, one of the opportunities that I get to do, that you guys hang out with me, but I make notes to myself all the time because I think I'm doing a lot of research. We're doing the research together is what's happening when I'm talking about this stuff. But I've been talking about a capacity trade here, and this is exactly what I'm talking about here. Here's a transportation index. It's the only thing long. If capacity is going to come back into the economy, tranny's got to be the place to go. The transportation will be it, right? So this is going to be something to watch. I just made a note, but we could also drill down and just see, actually see what's long on that as well. So we could actually go and click on the R button, and we could review this index. Yeah, we could review this index just to see what it looks like. And yeah, so it's up a bit. So it's had three trades off of the lows going back. So this is a third trade, and it's actually in a phase one, which means it's recycling. So this index could have a whole nother level. We spiked up, and the reason why we spiked up is because of the airlines and that trade that spiked up going back into the June high. So that June 9th high was the place where that happened. And now we're seeing recycling. We're probably going to try the highs on this index maybe. It's basically got a hair trigger in this. It won't take much for this to roll over. And my guess is, with the way the markets are trading today, it's going to continue to maybe break out of this pattern. We'll see what happens. But you know, this is an interesting view of what's going on. Also, on reversal patterns, it's recognized a reversal pattern, and it says that it's experiencing upward outside reversal. It's a very bullish pattern that suggests if tomorrow's close is higher, we should trade higher over the next 3 to 5 days. So the models have these trend phases, and reversal patterns are recognized when certain things happen. And so there's a little bit of smartness. And this is an old, I tell everybody, if you're seeing this for the first time, this is an old piece of software. We have a newer platform that we use, but we revived this. You folks can get access to this easily. You can go to the Kendall Report /WaveTech, kendallreport.com/WaveTech. There's a video there, and you can sign up. We're not quite mid-month. It's, you know, we don't have a trial, but it prorates every day. It's $3.12 a day is what it works out to be. So it's a bargain just for the ideas. And we run this whole database, issues signals on 16,500 stocks. So, and we do training every week, and there's a lot of things that yesterday we have a WaveTech. We do usually about 2 hours. I wanted to do an hour and a half yesterday. It was almost about 2.5. But we do a lot of training and interaction with you folks, and there's videos and all that kind of junk. But this type of pattern is, when I see this, that's why I made a note to myself to look at the transports for some ideas here. So if I go over to research, I flip this thing to daily, and I go to transports down here. We can look at this. Airlines are a plus. So these are all the major airline stocks that are in there. And you see some of these are up, like right now, what is this? Delta's up 21%. And you know, it's so there's all the airline stocks are here. Here's the ones that are so we've got right now 25 stocks in this subgroup. 23 of them are long. 92% are long on this thing. So that's pretty phenomenal. So I'll show you. I put this Buffett portfolio I mentioned earlier. I'm kind of down a rabbit trail, but it made an all-time. This actually made it is right trading at all-time asset highs right now. It's currently up 99.43%, and there's been 2 trades. And I won't go through depth on this, but this is a way. Right now we have 7 of the 9 symbols long right now, and we can see exactly what the open positions are. And this is a complete automated trading system. So we got American Airlines just came in on 825. It's the only one underwater. We got Allegiant up 14. You see Delta up 21. JetBlue up 21, up 18 on SkyWest, and UAL is up 10. But this is a great, yeah. Somebody said love it. The reason why I called it the Buffett portfolio is there's a video on my channel. If you watch it, it's how to take advantage of Warren Buffett's mistake. Yeah, I've mentioned this story before, but a buddy of mine in London told me he heard through the grapevine through some institutional players is that Buffett, every crisis there is, Buffett always has cash on hand, and he always shows up at the government talking to the Treasury and different players around the administration, no matter who they are. He becomes apolitical at that point in time, and he shows up and he's always got his money. So the rumor was he had all this cash on hand that he wanted to do the financing bonds for the airlines. And the Secretary of Treasury told him to go pound it. So I heard, well, we don't need your money, we've got money. And Warren went home crying, and he sold the airlines, and he sold the low. It was a classic, and then he wanted to tell everybody he sold the low, so he would try to maybe destroy it. Instead, we all bought. And so we'll see. I love trolling Buffett because he's easy to troll, and he's also a pump and dumper. This will get me going because he'll come out and tell you what he did last week. So like the Apple trade that he did. He had bought Apple, he added Apple, and he brought his girlfriend Becky on CNBC on and talked about how he hung out with Cook at the Apple campus for like 4 days. None of us get to do that. Got inside information, goes and buys Apple, goes on CNBC, tells the world, hey, I just bought Apple, so everybody piles in Apple like lemmings. Meanwhile, it's sell, 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 sell. He's still got a lot of it, but you get my point. He's done that in so many trades. I've been watching this guy for 30 years. Anyway, I'm done. Warren Buffett rant. I'm sorry, it triggered me. I just go there. Okay, let's go back to work here, and let's start digging in through some of these stocks. Might as well start with Tesla. Now, somebody mentioned a dead cat bounce. This is a dead cat bounce in Tesla. And we did trade down. A couple things that happened here. We did trade down to some pretty extreme numbers. We know that, but if we look at the market grid here, if we look at the grid, STX was 320.58, the low 329.88, so pretty darn close to an exact STX hit. We're trading now at 368.74. We're just now getting back to S2, and you can see this thing has bounced. But one of the reasons for the bounce, and if you've been watching for a little bit, you know the PPM1 is a plus 3.42. That means the average, the 10-week moving average, is advancing at 3.42% per week. That number right there is 342.56. So we've gotten back above that level. Chances are we'll continue to move back toward S1. Who knows, with the volatility, we might be able to print toward the R1 number 440, but I think closer, probably 395, somewhere between 395 and 440 will be the number. But you can see the PPMs just roll over, they just collapse. PPM1 sliced through its first and second derivative. PPM2 did the same thing, and PPM3, which is the slower index. So let me explain what these all are. PPM1 tracks the 10-week moving average, PPM2 tracks the 21, and PPM3 tracks the 40-day moving average. And I know people are so creative, and they take a 200-day moving average and 150. I get and I have the same thing. I have a longer term, intermediate, and a long. What I'm talking to you about right now is a market theory that I developed back in the early 1980s, 1984 to 86, called Wave Tech, and that's what everything's about. This has been my career. And Wave Tech has its Elliott wave with moving averages, and the PPMs tell what the probabilities are within them, and everything gets defined around that. So I've talked a lot about this. I won't go as deep in as I did last week. If you want to see a deep analysis of Tesla, go watch last week's live stream, and it's marked on the timeline when I went through Tesla, so you can look at that. And I was talking about Tesla it was 5 waves up, and that it was very close to a top. Of course, we've seen that come into play here. But let's just talk about what's going on here. This was the pattern that I was talking about. So we had the 2 things. There's a 3-wave pattern here, and then what I talked about last week. You know what? I need to restart. Let me pull this over. I need more room to draw. Okay, so this is what I talked about last week. The longer term is this is a wave 3, and then this is most likely an A. We should get a B. I think we get something like really crazy like this. So we get some kind of triangle to build. Maybe it's sloped like this, and then ultimately we get that. This is longer term. And this is a weekly graph. So we're looking at, I'm going to call it maybe 18, 20 weeks in this pattern, maybe 12. That'd be 3 months. This pattern will take a while to unfold. It's going to have to consolidate. The PPM ones were at plus 3.42, plus 0.96, plus 3.96. So these are very robust. They are slicing through first and second derivatives, at least on 2 of them. This one looks like it's inevitable. It's going to head down to that line. All that means is that the momentum of the moving averages is going to slow, and that the moving averages will catch up to market action. So we get the expansion like we saw with a big move above. Let me clean up some lines here. So during this phase 3, this is that I'm just drawing here. This is roughly this. I'm trying to pick up this. Here we go. This is fairly close. It's not a straight line, but this is where the 10-period moving average comes in. So we should see the market bang against that. It's going to have enough momentum. The market grid will most likely contract a little bit. You'll get what I call potentially a dragon formation. And what that means is just a high level consolidation. This is what I was talking about last week. I did a deep dive, I think in like 25 minutes on Tesla last week, because what I was telling everybody in Tesla is that split was not positive. That split was a major negative, because they just put 5 times the amount of stock on the market that they had before. And that is not a good thing. And then they raised $5 billion. And I said this multiple times over the last several streams, is if you're in the Tesla boardroom, you're high-fiving, because they got all kinds of people that buy into this stock. They didn't care. And I said this, you can go watch this stuff, is that they don't care if the stock drops 20%, which it dropped 25 yesterday. They financed, they got $5 billion in new money. They loaded the stock up. They raised money. They've got their corporate strategy in place. They're not playing the stock price. Everyone else is. And so from a boardroom standpoint, from a corporate finance standpoint, These guys nailed it. And I know I've said this several times, but you know, Elon's not the only smart guy in the room at Tesla. I guarantee you that. He's a very smart guy, but he's not the only smart guy. And so these guys knew exactly what they're doing. They structured it perfect. I'm ultra impressed from a corporate standpoint. So there's two things. And I'll try to cover this as well very quickly without going too deep. But this wave 2 pattern was somewhat simple. So what that tells me, there's a rule in Elliott wave that talks about the rule of alternation. So if the first correction, so wave 2, the correction waves are 2 and 4. If the first correction is simple, otherwise simple, A, B, C, market goes up, takes out the wave 2 high, the wave 1 high, then you can, that tells you we're in wave 3, all that kind of stuff. If that's simple, then the next one will be complex, which means you get what's called a double zigzag, an A, B, C, D, E. Otherwise, the correction lasts longer than you think it will. And that's what's going to happen here. So Tesla is going to be the, in my opinion, the ultimate trading stock out there. So while it may not be, you know, just going straight up like it was, it's going to have, you see the size of this grid on this chart. The range is 348 to 218. Multiply that times 5, right? That's 1,000 to 1,700 or something. So this is going to be a huge trading range. We're going to trade back into the middle of this range, which puts us R1, R2 is going to be the I've got to get to the right, let me get to the right date. I had clicked on something. So R1, R2, which is 441 to 467 is a given. And those of you that, I've talked about this, when I was on the Pacific Options Exchange, they called me Dr. Given, because I would just say, buy this thing, it's a given, it's going there. This is a given. So we'll see this range, 440, 467, no problem. And maybe even see, you know, close to 1,500 here. No, that's going to happen. And this lower end of the range and playing off this 342 level is going to be the place you want to trade off of. So if you can set up an option strategy, maybe let's call it a 2 to 3 week option strategy, maybe do a vertical on this thing, you might be able to really play this really, really well. And I know I haven't seen him around. Charles, if you're watching, that's the trade that we want to do. And I haven't seen him on the timelines, so hopefully he's around, but I'll make sure that I reach out to him. But yeah, so this is it. Let's go to Apple. I went pretty deep in this thing. Same scenario on Apple. There was something, there's a video on the channel, if you just tuned in, last Thursday's morning, I put a short signal out on Apple, and I also mentioned this, I'm trying to remember when I did it now, but I mentioned if you did that trade, I think it was on a live stream yesterday, we were talking a little bit about Apple. If you did the trade, you should have covered that trade. Believe it or not, yesterday was the cover. And if you look at the rules, I put the exact reversal rules on basically the chart was there, but the main thing I was covering is here's the reversal rules. And it did not meet the criteria for the trade yesterday, and you would have covered that trade at the close or on yesterday or sometime near the close. That was the time to close that trade. So if we look at this same scenario as we had looking at Tesla, we're going to set up this big wide trading pattern. So Apple, Tesla's, probably we can go through a lot of stocks, which we'll go through in a minute. They're all going to set up these high level consolidations. You know, I've been told I've missed the collapse, the end of the world, all that stuff. These are not end of the world patterns. These are consolidation, high level consolidation patterns. These are things that are going to take time to unfold, and we won't actually know whether this top, both in the market that we printed at 35.80 on the S&P, the prices that we printed last week on Apple, you know, post split at 137. We won't know that these are the high for multiple weeks from right now. But during that time, you shouldn't have, if you had any long positions, it should have maybe been from today or maybe yesterday if you're just taking a shot. But once again, the option trades are probably a vertical on this thing is going to be the way to play this thing. There's going to be some really good stuff. We're going to build these real large trading range. So look at the grid on a weekly basis. 116 to 132 is the range for this grid. As with Tesla, we should trade R1, R2. All right, we couple rules for the next segment here. So what I want to do is we'll go into talking about we'll start covering some individual stocks. I think I covered everything I wanted to cover from that standpoint. We're still trading 18 on the S&P, so it's just kind of grinding out up here. Machines are turned on long today, and they're going to grind this out. We'll see if there's any selling, and I'll, as always, I'm going to hang in for the next hour with you into the close, so we'll watch the close together. So I'm hearing an audio issue. Is that universal, folks? Everybody hear me all right? My meter's pegging on this thing, so. Yeah, okay, I'll do Bitcoin. Thank you, Gino. Yeah, Gino, as far as your question goes, I would tell you that you're not going to be able, you don't want to take a position up here, but I will define that stuff on the videos where we want to go. So here's the rules guide. Don't give me names of stocks. I'm not Jim Cramer. I don't know all this stuff by heart. So give me symbols that you want to cover, and we'll go through. We'll go through that. All right. So yeah, I just like to come on screen. I know you guys want full screen, but sometimes I like to look you in the eye when I'm talking to you, right? So all right, so let's do a couple things. I'm going to go full screen on this thing so we have everything rolling. Thank you, Wacky Warrior. Appreciate it, man. All right, I'm going to write down some of these. All right. Yeah, I'm writing down a bunch of these, so bear with me. You guys got to slow down on me. It's going to take me a little bit to get through there. Yeah, I want to look at that one. Yeah, you guys, these are great ideas, man. We had about 4 hours I could go through this, mainly because I go into too much depth. So what I'll do here, I've got a list. Okay, hold up for a little bit, folks. Man, there's some good stuff here. So I'm trying not to cherry pick. I just wrote down stuff, and we'll just kick through these the best I can. I'll start daily and then go weekly on this stuff. Yeah, you know what, Gino, I'm gonna actually go to. I want to actually cover the VIX because that was probably the most interesting thing. If you were late on the WaveTech channel, thanks, Chris. Appreciate it, man. Do I think another dip's coming after the election? I don't know. We'll see how it sets up. Like I said, I see we're in an intermediate uptrend well into the for another 6 months. So that's going to carry us into the first of the year for sure. Okay, let's look at the VIX, and it is collapsing. And I mentioned this yesterday after the WaveTech, we got into a little bit of markets for about 15, 20 minutes. And I think also on the close, but the most crazy thing I thought that I saw yesterday was the collapse in the VIX when the market is down 2.5%. The VIX was down. So anybody's got an idea on what that was about? It was baffling to me that happened. But we look at the VIX here. There was something happened, and I talked about this yesterday. On the market grid, there's a rule. If the market closes above the RXT, or the extreme number of the day, it signals a 2 to 3 day decline. And we got that right here. I've got it on the screen. On the 3rd of September, we spiked above, we closed it on there, closed above it, and it signaled 2 to 3 days down. Here we are. This is the 3rd day down, and we're down almost 10%. We're back at 28. And it's just bizarre to me that this didn't happen, but we're also seeing, we're probably going to go back under the 200-day moving average, down into the grid. 20, maybe 25, 23 is possible. We may have, there is a 10-pair moving average at 27.39, last 28.33. So this is the cash VIX. But yeah, so it's, yeah, pretty phenomenal. So I think what that means is sideways on the S&P. All right, let's go for these stocks. Some of these are going to be in order. Square is a good one. Let me just put a couple things on here and see if we can. Yeah, so put some logic up here. Actually got a sell on Square at 157, sell short. It's rebounding back up a little bit, but we're seeing PPMs very negative, minus 0.68, minus 0.16. We've rebounded the same scenario that we've looked at, and I talked about that. Thank you, Andrew. Appreciate it, man. The same scenario that we talked about on the S&P S&P and NASDAQ, as we've rebounded back above that 40-period moving average, and that's going to be your support line to follow. So you put a simple 40-period moving average on a chart that if you're looking at even buying against that number, or you can play against that 153.70, let's see, hang on, 141.47, the low today, 39.25. And if we look at the grid, 36 S1, so we didn't get to an S1, but we did trade just below that 40-period moving average. And you want to stay above that. If we do that, we could probably start to move up towards the 150 range on this stock. If we go to the weekly chart, weekly chart tells you a lot. We've got low 136.89, S2 135.48, so pretty much a hit on S2. R1 151.54, the high so far this week 146. So I would look for this thing to recover further up towards that number. Thanks, Richard. Always appreciate a few euros. But as far, this is, like I said, all of these stocks that have saw these big reversals that we've seen last week, there's two things to watch out for here. Is this 10-pair moving average 139.13? It's up about $3 per week, so that number is going to be 142 on Square. So that's going to be that 40 10-week moving average is going to be your support. It's also up some huge numbers, so you're likely to trade into the grid as we come in next week. This grid will stay somewhat similar. I don't see any expansion at all on this thing. You'd have to close above R3 weekly to change that. That's 163. I don't think that will happen. Certainly can see 151 to 157 for sure. And so we're going to set up the same high level consolidation. And this is what I've been talking about with the NASDAQ, is going to set up that high level consolidation. And ultimately, you're going to see the patterns that set up on these small cap and mid cap indexes will start to lead and start to see some upside on this as well. All right, let's keep rolling. I covered silver, but someone asked for SLV. Same scenario. You're going to need to close. If you can use silver as a proxy on this, we need to get above 25.40. High today, 25.19. Get above that, you could see something. I just noticed something on SLV. There's a little blue dot down here. That is a signal that today, this is what I call a pre-signal of a cycle. So we are getting a cycle bottom here, potentially in the silver. And right now, silver has a minor short position on. I don't expect it will do much, and it'll probably get stopped out of here pretty quick. But there is a first signal for a cycle low, and I didn't see that in the silver itself. Let's go to weekly. Yeah, weekly. The scary part about this, on a weekly, there's a trade here, but there's no new surge in prices likely to come out of this pattern. We're going to continue to consolidate. We did something that I talked about earlier, that RTX trade on a weekly basis right here on 8/7. When we traded up to 26.90, we did get a reversal, but that signaled at least 2 to 3 weeks of sideways movement. That's what we've got. We're now into 6 weeks. There's probably a couple more weeks before we could get this next leg up. And one could argue that this is a wave 4 that's setting up here, and that there would be a move higher. And let's just take that a little bit further here. So here, this would be the pattern. So we've got this 3 waves up. This is wave 4, and then ultimately we'll see a wave 5 up. And I won't do the calcs right now, but if you figure out what the high-low is on SLV here, this length of this wave here that I'm drawing in right here, then the 5th wave should be similar in length. So if that happens, then we're likely to see, I think there was some numbers. Let me take this off and let's go to monthly, just see if there's some numbers out there that will give us some further insight. Yeah, not really much on the monthly, but we did have a monthly cycle come in July. So this is a big cycle. And I talked about this before, that if we look at a retracement value on SLV, let's just do that. That'll take me a sec. So if we go ahead and put, where's the low here? If we look at these numbers, 50%'s 2998, 0.618, 34, and then ultimately 39. So I suspect you probably get into 0.61, 0.78 retracement on this. This is very, very likely here. And I'm sure all of you that are into the miners and into the silver have heard all about the JP Morgan manipulation of silver. Okay. Let's do Intel. This was on the Facebook, on our Facebook group at Facebook/groups/the Kendall Report. Join us. If you go to yesterday, I made a comment, and you'll see these dots here, that yesterday was a cycle low. You're welcome, Gerald. Thanks. I don't know if it's Gerald or Liam, but both. Like I said, I can always use a couple of euros. Thank you much. But the bottom line is, this was a cycle low. We're seeing it up about 1.88%. There's resistance at 54 on a short-term basis. And then actually we'll call it between 49 and 54. We should trade back in there. We traded above the 40-day moving average the other day, got a reversal, printed down to a new low. That was probably the low of this pattern. Let's look at the weekly, and we should see something interesting there. Yeah, see, right about, and I have talked about this. I think same person is asking about Intel. Is this 200-week moving average has been the support line, and it's continued to hold. That number is 4780. We printed down several weeks ago, at 47 or 46.97, so just below it. But this 10-week moving average at 51 is going to be a really tough number to get through at the moment, especially with a ppm at minus 1.78. So this thing isn't likely to go much higher, but it is setting up a potential bottom. There's still a lot of work to do, but I think this 200-day will continue to grind. And I'm just going to make up the contrast between this stock and AMD can't even be compared. But it's interesting that on AMD, we got the opposite. We got a cycle bottom in Intel. We got a cycle top in AMD. So this thing's kind of played out, but we're same thing, same pattern. Apple, Intel, all these tech stocks, same pattern. 69.57, 10-week moving average. That's your support. It's rising at 4% per week. So that number, as we come into next week, I know it's Wednesday, but as we move toward next week, is going to be about 78 or so. So this is a pretty tight pattern. Still expect to see further consolidation. Everything NASDAQ related. A lot of these stocks, just because of the database issue I talked about. Yeah, boy, I'm getting all kinds of foreign currency today. Thanks, Christoph. I appreciate it, man. I got euros. I got Canadian dollars now. This is awesome, and I got U.S. dollars. So thank you. But this pattern that's going on here on AMD is still positive because there's a 4.06 and the ppms are at the levels they are. We're not going to decline out of this pattern, but we're going to continue to consolidate. And we're into all of these consolidation ranges for the most part about 6 weeks in. There's at least 2, maybe as many as 4 more weeks. And this relates to everything I've been telling you folks. This is everything I've been talking about, is that I just want to come back on screen here. Everything I've been telling you about is that we're going to see from, we'll say the start was around a week before last, even though we saw an index high on last Thursday, we're probably week number 2 right now into a 4 to 6 week consolidation before this thing recycles and is able to start to put some, start to see some short-term trends emerge. And I talked a lot about that earlier. So if you watch the rebroadcast, you'll understand that from our database standpoint and what's going on there. We watch 16,500 symbols on our database. So we're able to see some very dynamic rotation that comes up, and that's reported through our quant tool. But the bottom line is all of these markets are going to continue to consolidate. And that's all of these techs. It's just, now what happens after this, a lot of these look like this is all a fourth wave. This is not the top. It is not the, as they say, it's my channel. I get to have my opinion, right? This is not the top of the markets. This is a fourth wave consolidation. There's another high. There's a whole nother sequence yet to go. And on a weekly basis, then we're looking at another, we basically will call it, we've been in a lot of these stocks have already been consolidating here for maybe 4 to 6. There's a couple more weeks at least before we're even capable of going up. And so from the basis of the database, like I said, I think we're about 2 weeks in. We're probably another 4, maybe 6. So that carries us in really darn close to the election. And so it's interesting, the timing, or at least what it appears the timing is. I'll be able to zero in on this as I see more of the patterns unfold over the next several weeks. So that is definitely what's going on there. All right, let's go to some other stocks here. One of the stocks that somebody asked for, I want to see, is one of the COVID stocks, or the vaccine stocks, which was Moderna. This thing is just failed, and we've seen a couple things. We had the RXT sell signal right here on the 17th. Should see 2 to 3 weeks minimum down. We've got 8 weeks now, and we're trading down into the grid. If you look at the PPMs, PPM1 is completely negative. This is weekly. This thing just diving. We're probably heading toward $45 on this thing. 40, we'll call it 50 to 45 on this. But I kind of wanted to look at this one. This is a stock. Here's BA. Look at Boeing. And, you know, I've talked a lot about this. The PPMs are very negative, minus 1.2. The big one is the 40-week moving averages at the the 40-week is coming down hard at 211 on this stock. This thing's is incapable of getting out of its way. And I was actually talking to my brother about this just the other day, and I was like, why would anybody buy a new airplane? Maybe some of the specialty ones, but you know, no one. We know the problems with the 737 Maxes, but the issue is that all the airplanes are parked in fields right now because of the capacity of the airlines right now. Nobody's using anything. So this one is lucky if it continues to consolidate. There might be a little more downside. I don't think we'll see a new low on this, but there's actually no reason to own this stock. There's better ideas out there. And in fact, on a short-term basis, there's, other than trading, there's not a lot of stocks to own as well. And as we go through the weeks to come, and the database starts to come back in line, like I talked to you about earlier, then we'll have some things to talk about. For right now, everything else. Okay, Isaac, yeah, I'll just repeat everything I just said for 2 hours. No problem. Do it just for you. Anyway, hey, just watch the replay. We'll get everything tagged so you can see what I talked about at different times. No problem, man. Thanks for coming. Yeah, I'm just seeing stuff, you know. Let's take a look at crude oil. This is a big piece of the whole recover trade. We continue to get up around $46, $48. I've talked about this at length, but PPMs are real positive on this thing as far as that goes. We've got, this is weekly, PPM 2.74, minus 1.69. So we're looking at the cap on this stock, on oil around $49 to $50, and the floor is probably right where we've traded already, is down toward that $40 level. So this thing's locked in a $10 range, and if you're trading this stuff, you can probably buy down around 40, sell at 46 to 48. We might see a slight new higher in this, but there's a fair amount of resistance. And if you look at the grid, that pretty much tells the story. This is a weekly grid. Right now, the low 43.65. We blew through STX on the downside. On the upside, 46.11. Let me make sure I'm on the right bar here. Yeah, let's try that again. Yeah, 41.12. Yeah, we did go below that, and then high 43.81. So we basically haven't even been able to get up to an R1, and we've been we've been almost to the STX or the extreme on the downside. Yeah, I see a comment on IWM. I usually use IJR, and that's one of the indexes that I have mapped out on a spread. So if you were to do the long the IWM or IJR against the NAS, maybe the Qs, then you might be able to, there might be a pretty good trade there. Yeah, so somebody says they have no idea how to read the graph. So what you're seeing here is market grid, moving averages, and high-low prices. So it's pretty basic, but on Shopify here, we're also in this. This is a different configuration. Now the PPM1, I just mentioned minus 0.73. That tells us we're in an intermediate downtrend. Resistance 990, 994. We trade up there. The stock is most likely not going to get above that 990 level, and we're probably going to be locked in this grid between the 902. Call 901 level S2. We printed 906, so we came down to S2. And most likely we'll continue to see a bit of a downside, but the 21-week moving average is 883. And if you look here, 863 is S3. So that's going to be your support. Most likely on Shop, you're locked into a range. We'll call it between 883 and 990. That's where this thing's going to trade. So once again, a lot of these trades are setting up as a absolute great option, 2-3 week option trade to collect some premium here in a range. So that's definitely looks like there's a lot of setups here. I just brought up a quick view on a weekly on the 10-year. And I've been talking about this. I still think we're going to move toward 1% on the 10-year. PPMs are all very positive. We're just waiting for PPM 3 down at the bottom here to kick in. And we should start to see yields that tick up a little bit. That may add some further support for the Dower. And if you go back to the Dower analysis I did a little bit ago. Okay, let's do Netflix. Netflix is still positive, but the PPM1 is just slashed through here. This thing's rolling over, but the key number is just like on Shop. It's going to be 467. So we're sandwiched 467. We'll call it 501. on the upside, maybe going to the 503. I don't think we can even print a 528. We might. We had a high 522 this week. So we've been at this stock's been under pressure, and I don't see some of these stocks. The good news for Netflix, it wasn't in the mainstream of the cash flow like Apple and Tesla was, and so we're seeing this. But this type of action is just telling us we're going into this broad, high-level consolidation. The very bottom of the grid is 463, probably a 542 range from that standpoint. That's what we're seeing here. So yeah. Yeah, unfortunately, there are no spreads in the WaveTech tool, unfortunately. Yeah, D, I'd like to set that up. I don't have a good option tool. I'm going to get a hold of my buddy Charles and see if he can set something up. What are some of the somebody said something about the other vaccine stocks. Anybody give me some symbols. I'll look them up. Yeah, Gino, I think I'm going to be doing some new videos to really tear into the PPMs and the market grid. Like I said, I'm working on a project that is going to be, I think, really cool once it's done. Yeah, let's do Microsoft. Somebody asked for that earlier. Microsoft rebounded quickly back above its 10-period moving average. If we look at the grid, the low was 202, S3 200.56, so basically a hit on the grid. Yeah, it looks like yeah, that's right. Looks like we are going to possibly print a new high on the S&P. Markets are absolutely screaming. Nasdaq up 4%, so moving those spreads around a little bit. Yeah, so the peak on Microsoft here is probably around that 218, the range so far 214, 202. So we basically have an S2 R1 so far this week. I don't see that expanding at all. But overall, this thing is going to continue to trade within this grid range. So you can mark this down. It's not going to change much. This is weekly over the next several weeks. So if you want to write these numbers down, these are going to be the numbers to trade off of. And the way we work with this grid, you look for reversal patterns off of these things. So we're looking at 214 high. We just on this thing, we just printed a new high on Microsoft as we speak. So we're moving toward that R1 218, and there's a new high on the S&P. Let's flash. We haven't looked over there for a little bit. Let's go over there. Futures printing slightly. somewhat interesting. Our liquidity has picked up a touch, but not a lot from that standpoint. We're still seeing a fairly low liquidity in the S&P futures, but definitely just printed a new high. We had a high of 24 even. We're trading 275. So yeah, so markets continue strong. As I mentioned a little while ago, these machines are not going to let this thing go. They're going to grind them out. They want to hold these up because they did a lot of buying early in the session, and they're going to want to grind these out. So we want to make sure we watch that. We want to watch that whole scenario. So let's see here. Let's go to let's stay at the S&P just for a minute. We're about a half hour off the close. Yeah, so I see, Gino, you said something about the 10 and 21s about the cross. When they do, that will probably be a high, not a positive. Typically, we'll set up a 3 to 4 bar high. Yeah, Andrew, I would just tell you, like always, watch tonight's video. I don't know if you're here in the States or where you are, but I release those. I'm Pacific time, so the videos last night came out at 1 a.m. So I actually like to get them out at 11:30. That's the goal every night. I don't meet the goal very often. So they're certainly up before the opening. Yeah, somebody's talking about the airlines. Who is that? Yeah, so here's my Buffett airline trade. So we just bought, and I'll go through American Airlines here. That's the only stock that we have in the Buffett portfolio right now that's underwater. Most of these came on in early August, been held for about a month, a little better. And we got some nice returns on these stocks. I'm not sure what they're doing today, but we'll take a look. Let's go ahead and look at this. This is an hourly graph, so I'm going to flip over to a daily. Give me just a sec. Yeah, so this is the dog. This is a bad airline on a good day. So it's definitely lagging. I mean, the only time I fly American and I have no other choice. But I have a buddy that just loves them, and I can't figure out for the life of me. But anyway, yeah, so this thing's consolidating. PPMs are somewhat neutral. We really need to go to a weekly to get a feel for this one. Some overhead resistance, but the PPMs are positive. There's still a lot of overhead resistance right now on this stock at 1690 is the overhead resistance. So just a few bucks higher, there'll be resistance here. It's going to take multiple weeks for this one to go. It's not as good at all looking as Delta is actually moving up, and you see PPMs are much more robust on Delta. Still have some major resistance and work to do on all of these airlines, by the way. 3660 is going to be resistance on this chart, and we're trading 31, the high that we traded the other day. $32.53. Actually, today's high was the higher number, 33.10. So yeah, it's 36 is going to be resistance. There's several more weeks of work before this thing's going to blow up. So I don't know, somebody was talking about, is there an airline deal floating around the street? Because I haven't heard that. Yeah, JetBlue is also one of the big winners in our portfolio. You folks can get that portfolio, by the way. Sign up for the WaveTech tool. That's easy to do. Yeah, so on JetBlue, that resistance number 1306, we traded 1289 today. Supports 1112, so we're sandwiched between, we'll call it 11 and 13 right now. But all of the PPMs are positive with the exception of the 40, and that's why there's resistance up there. It's going to take at least 2 more weeks for this thing to set up. Yeah, thanks, Wacky Warrior. I had heard something about that, but you know, and this was my argument when Buffett sold the stocks. He had to know that there was a deal coming. You know, how could you not know? There's no way they're going to let these airlines fail, right? Cruise lines, all the cruise lines for our most part are domiciled in other countries. You know, other than we've got a lot of people that work in the ports and stuff like that around the country. They have jobs around those. None of these companies are U.S. companies for the most part. They all take the tax break and domicile at unique places on the planet. So let's do a couple things here and go to. So this is Slack Technologies work, and this thing's rolling over. There's not a lot of data here. We might actually have, let me look at something here. Yeah, I'm going to bring up, this is our portfolio. Yeah, so we had a nice buy on work over here. This is our platform, the portfolio expert platform. We're out of this thing. We're starting to get a lot of noise. You can see the PPMs are actually easier to see here. And they're all fading, but not all of them below zero. We've got PPM 2 and 3 still above zero. So there's not a lot to talk about here other than we're in a neutral trade as far as going back and maybe looking at a daily graph on this. There'd be a little more data. We've actually traded down below the 200-day. Yeah, this is a tough stock. I wouldn't be, not sure I'd be looking to buy it. Maybe it's going to rebound back above this, but I don't see this as anything that you'd want to play with here. It's going to take, with PPMs, all 3 of them rolling over really hard. There'll be some, we've also blasted out of the grid. This grid, tomorrow's update will be a straight line down. So you're going to have a downward slope grid, which tells you about the trend as well. It's like over on the far left-hand side of the screen, you're going to have a grid that looks like this, probably maybe 3-5 days before you're going to see any type of pattern there that's going to be interesting that you want to pay attention to, I would think. There's a couple I was looking at that I think, what time is it? Yeah, so what we'll do, and we always do this on these live streams, the last, we'll call it 5 minutes at least, we'll go into level 2 on the E-minis, watch them trade, and we want to watch those 2 minutes after the close. Those tell you everything. Yesterday, we actually saw some decent short covering, but when on the reopen of the futures, man, they just creamed them. I mean, the NASDAQ was down over right at 1%, maybe a touch more, and then everything just rebounded from there. I'm going to do Amazon. Haven't looked at that. Yeah, so yeah, Amazon is trading back up, back above its 40 today. PPM 1.818. This is daily. PPM 2.20. So you have a slight uptrend. So we're rebounding back in there. As far as the grid goes, bringing that up, you'll see that the market's moving up toward the, yeah, it's 3303. We're above R3 right now, so we're getting close to back toward this 21-day moving average. 3303 is that number, so we're traded right up to it. That's probably going to be resistance, probably going to be locked between the 40 and 30. 3201, 3303. If we get above 03, then looking up toward the upper end of the grid, toward the maybe 3340 levels, something like that. Let's look at the weekly. As far as the weekly trends, I think all these stocks, and it's what I've been saying in this whole stream today, is a lot of these stocks. Here's basically a vertical, not quite as vertical as some of them, but 3152 is the 10-week, 3192 is the 10-week moving average. The low was 3130, so we got below that, and now we're well above it there. And so this seems to be the theme, but PPMs are all rolling over, just telling us not that the end of the trend is here, but we're going into a large consolidation. Doing LULU, this thing's rolled over as well, and in fact, yeah, we're looking at a lot of PPM rollover here. Next stop 304 maybe. These are a lot of these trends that are played out, and this plays into something I've been talking about with you folks during during this whole show today. I've been talking to you about the theme that's going on, this high level consolidation. There's a lot of these stocks that have been big movers like this that are going to go into a massive consolidation, 4, 6, maybe 8 weeks. That looks like to me exactly what's going to happen here as far as that stuff goes. Bear with me 1 second here. Okay. Yeah, so just know if you look at a stock and it's got this big move up, that's going to be, it's probably going to go into a sideways move, and it's going to consolidate from that standpoint. And that's what you're going to see go on for, we'll call it, this is 2 weeks. I talked about this earlier. This actually started, the internal rotation started 2 weeks ago. Been talking about it on the channel. Not just leadership change, but a big rotation. Was first recognized in our short-term database. It got up to 90% long, and we dropped to 65, back to 90. And I said, we're probably going to go to 42. And then when we went to 40, I said, I'm looking at 28. Now we're at 17%. So what that means is there's only basically 2 stocks out of 10 are long in our short-term database right now. And that just takes time. The patterns, the configurations all have to set up. this all takes time before, not, you know, a trade. Most people think, well, a trade, the market went from here to there. What I want to see is the next 35 to 50 day trade setup. That's what we want to see. Those are sustainable trades, and where a lot of this stuff is just snap back. They're just trading. We want to see the trends consolidate. We want to see these stocks consolidate, set up new trends, and then go from there. All right, let's take a look at AMAT. Same story. And all these tech stocks, same story. We're trading down to extremes on the grid. It's a weekly graph. So we're likely to continue to see this thing just kind of consolidate here from that standpoint. So don't expect, there's not any trades here. This would be best brought up. Let's take a look at something here. We go over to WaveTech tool. So this stock, let's see where it exited on this. Yeah, so you see where my cursor is, there's a black dot right there. This stock was exited right there. Right now, the current phase is what's called 5C. AMAT has confirmed a downtrend is placed. Expect prices to continue to fall. Resistance levels on the stock is in place. So here's our resistance, 61.95 to 63. So it's well above where we're trading. And so this thing came in. If we look at the trade log here, we look at the trade log, you'll see that it came in at 52, sold at 63, bought on 5.8. We bought a lot of symbols, by the way, in our database back in around May 4th to May 8th. In fact, the S&P trade that we had on from 48, I think it was 48.44. I'm sorry, 48. 24, what the heck number is that? What? Hang on one second. Yeah, 28.44 on the 4th, we bought the S&P, and we just exited that trade last Thursday. Yeah, it might be, you know, whatever's going on, it's not good with AMAT. So find something else to do, as they say. Yeah, so the problem is DXY is not going down. So DXY is going up. So it's probably going to flatten out. I covered the Dower earlier. You might want to check that out. I don't think DXY is rolling over at all. It's flattening. Weekly charts are bottoming. I covered that in detail, so watch that rebroadcast. We're down 0.19 right now. Not much going on there. Yeah, this is all bottoming patterns on the Dow. I covered that earlier. What time is it? It is 8 minutes to the close. So Tesla's ripping, somebody says. Yep, here's a 5-minute chart. It just printed a new high. PPMs are actually turning up on a 5-minute and starting to roll pretty good. So the dead cat bounce is maybe the cat's alive. So market selling off a little bit. We're down at 10. We printed 22, 24. We made a new high. So a little bit of selling coming in as we come into the close here. This is a 5-minute graph. Let's yeah, let's kind of watch how this thing is trading on level 2, just see what it looks like. So we got some decent selling coming in. Yeah, it's fairly stable coming in here to the close. Trading 04. flash over to the, let's look at the daily pattern here real quick. We got 2.5 minutes to go. So the key levels I talked about last night was for it to get back above the 40. We actually gapped above the 40. We're continuing to stay above that level. We're looking at a 24 high. We came short of an RXT number. Never came close to any of the support numbers that were out there. So let's watch the level 2 as we come into the close here. We got about 1.5 minutes to go. A little bit of selling coming in here. Now, what we want to watch, yeah, some pretty good selling coming in at the moment. Final minute to go. Like I said earlier, I wouldn't be surprised at all to see this thing printing 33.60 again. I mean, this was a nice rally and all, but this is not the end of this correction. Here we are printing under 3,400. It's pretty good selling coming in on. This is on the closing minute. So this is where you want to watch. You see it gets pretty erratic right here. See how we go out. And then what we want to watch is the 2 minutes after the close, which is the squaring up of a lot of trades that are going to come in. Yeah, so here we're printing 98. Yeah, heavy selling coming in here. This is the final couple ticks. So we're going to go out under 3,400 after printing 24. Some pretty heavy selling. Like I said, we're not out of the woods. That was a great trade if you caught it from yesterday. But this is not like the bottom reversal. We're into a lot of choppy craziness here yet. So here's 96 prints and 96.50 prints. Now this is what we want to watch though. We'll see what comes in after the close. There it is. We're closed. And we want to watch and see if there's any kind of short covering or any what happens from here. So we got a 2 minute window. The low was 95.50. Here's 94. So it's still heavy selling coming in after the close. A lot of liquidation. Look at this. 92 prints. 91s. This is probably for me the most critical. I hate when I miss this 2 minutes of the day if I have something going on and I don't see this. Look at this, down to 88 trades. So this was pretty significant. A lot of selling coming in. There's no conviction in this market. And the fact is that the machines were running this thing. They've been long all day and they liquidated on the close. That's basically what you just saw. So that was pretty much it. Traded down. What was the low on this thing? We printed on the low 89 low. So we started off the closing tick on the minutes. We started closing on the around 99, 98. So we dropped 10 handles in that next minute. So I'm just looking at some of the badges that roll in on some of the services here. So I'll probably, I'm going to call it quits here pretty quick. I'm just looking at and see if there's any interesting comments coming from services on badges and stuff. Yeah, so I see one here. Como opens up dining in New York City on September 30th. About time. Yeah, so there we go. You know, I've been talking a lot about this whole capacity. One of the things we worked on, and I will be reviewing this very soon, is this capacity portfolio. You saw the Buffett portfolio that we put together, and that's made 100% and since May actually. And so that's been a big trade. And there's only been, by the way, 9 stocks, 2 trades. Been a buy, we'll call it 3 trades. We bought, we sold, and then in early August, I called for the airline trade 2.0, and there's not been nearly the money that was made off of that extreme low, but it is generating about 10-14% in the last couple of months. We'll see how that plays out. But yeah, so we're trading back. I'm just watching the futures trade here. We're trading back towards that low print on that closing range and just after it. Like I said, that's my favorite time of the day to watch. It tells me a lot about the markets and the market player and who's willing, who's holding them and who's folding them, or if everybody's folding them. So that's always an interesting scenario. Does that mean that it'll be red tomorrow? Not necessarily, but what it does mean is that there's no major reversal occurring here. That was just it sets us in to a sideways range. I covered that early in the session. That's what I think is going to happen. Mid 3400s would be tops. We printed 3424. We overnight. Let's look at the futures range overnight here, and if I put this up here, you'll see it. This is a 1-minute graph. Let's go over and take a look at that. Kind of close out on this note here, but let's look at the futures high low. Last night we printed 32.95. We had a high of 34.24 exactly, so we had 124 range. I mentioned on Tuesday night's video that we have that the 3-day vol indicator that I have that is used to calculate the market grid actually said that at that time there's 124 point or 120 point volatility range expected, and I told you we're going to see some wild swings up and down. We printed down through that 3360 number. We went to S3. I thought we'd go to S2, and we printed 3330 yesterday. Now we printed all the way up to 3440. So like I said, don't be surprised at all. We see 3366. Those of you that have been watching my channel, in a few minutes when I get done talking to you folks, I'm turn the screens off. I'll come in, watch the reopening, but for the most part, I separate myself out. I won't do the market commentary until probably between 7 and 8 p.m. Pacific time tonight, and I like to just shut it off, get rid of the emotions of the day, and then come in. And so we spent a lot of time unpacking everything that we talked about today. So as always, appreciate it. Not that you can't see my face enough now. We'll just go full screen. So don't forget folks, if you want to sign up for WaveTech, you can do that. You can do that right here, and that will be, this is the place to go. You go to the kendallreport.com/wavetech. We prorate it. It's $3, $3.12 a day, less than a trip to Starbucks, and there's just a lot of information there. And soon, once we get the new market grid up there, just so you know, the market grids aren't in WaveTech, but they will be in or associated and bundled with. And there's a lot of value. We covered 16,000 stocks. There's a lot of things to take a look at there. And there's a video on this screen here that walks you through and tells you a little bit more about what the product does and things like that. There's also on our website, portfolioexpert.com, you can go there and watch under support. You can watch the training videos for that as well. So Yeah, really appreciate everybody, that shows up for these things. We have a good time. Last week we had, I think, over 1,000 viewers. We only got, I think, maybe 700 or 800 today, but that's okay. We had the same good time as always. It's not the numbers, it's the content, right? And so so join our Facebook group. Remember that. It's Facebook/groups/The Kendall Report. Join there. We do monitor that. We also have to approve you to get in. So come in and we'll get you into the group. And there's a lot of content that is going to be there that is not on YouTube and not on these live streams. There'll be very exclusive content on things. And probably will be posting, I was thinking earlier today, I'll be posting some unique little video clips that also will not be on YouTube's, but some clips that I can put up there and give you some insight into, very brief little 1 minute thought. It's a lot easier to do things in video. So as always, thanks for watching. I really appreciate everybody coming. And last week I did 4 live streams and 5 videos. We only have 4 days this week. Hopefully the markets calm down. We don't come up. But as always, as you folks know, if the markets get crazy, I'll light the screen up, hang out with you folks just so we can do it. I did do basically did 2 live screens yesterday. Did a closing live, kind of an impromptu, and then we did the Wave Tech training, and then today we have. Theoretically, I'm done for the week. I've got a lot going tomorrow, so it's going to take a lot to get me to divert my attention tomorrow. So anyway, have a great rest of your day. There'll be a video tonight and tomorrow night. Thanks again for watching and being part of this channel. Really appreciate it.